Well, later on today, the Bank of England is expected to raise its main policy rate, which will have consequences for both households and businesses alike. Well, among those keeping a close eye on developments will be Novuna. It's the UK's third largest asset finance provider, in addition to providing personal loans and helping some of the UK's best-known retailers provide credit to consumers. Today, the company, previously known as Hitachi Capital, reported a record pre-tax profit of £60.8 million for the year to the end of March. That was up 24% on the previous 12 months. Well, joining me now, I'm very pleased to say, is Robert Gordon, the Chief Executive. Robert, very nice to see you again. Before we discuss your results, talk to me about the impact that you've been seeing of the bank rate increases thus far.
OK. Yeah, we're not a bank, so we're a finance company and we have to borrow from public markets. So we have seen interest rates rise since December 2021. So we've had that in our vision all the time, seeing that rate rise and our margin squeeze. So it's been a very challenging year for us. I mean, that probably sounds remarkable considering we've had another record year, but it's been very challenging for us to make up that margin squeeze. We're not a bank. We haven't got that stable deposit base, which the banks have had to fund their mortgage books and their lending. So they haven't passed on those increases for a long time. And I think it was only really October last year, that people really saw that interest rates were going up, and now they're seeing it again as it's starting to hurt.
Yeah, I mean, in terms of access to funding for your business, how have you found conditions in the wholesale markets?
It's been tough. I mean, you're trying to get investors to part with their money for 3 to 4 years at a fixed rate. And you want a premium on that if you're an investor, because you're seeing expectations in the market, rates rising. So it's been tough. And our cost of funds have been going up. We're competing with banks whose funds haven't been going up with their stable deposit base. And demand is price elastic, unfortunately. So we haven't been able to raise our prices to our customers as much as our costs have been going up, so there's been a lot of margin squeeze.
Give me an idea of the extent to which your funding costs have risen.
Trade secret. I can't reveal that. But you can see rates have moved below 1% to your 3-year rates are now just the market rates of 4.5, 4.6, 5%. They're very volatile. They move every day.
Yeah. So in terms of the results, then, all 5 of your divisions enjoyed growth during the year. Where was growth strongest?
It's been a challenging year because of that margin squeeze. We had to take action right at the beginning of the year. So, one of the most important things about our business is we're incredibly diversified. We lend to big business, small business and consumers. So having that diversification, if one part of your business starts to contract a little bit, normally there's another part working well. So we do lots of different products. Operating leasing is one of our prime products. So we actually own the asset. With supply chain difficulties, prices have been going up, so we've made huge gains on when we're disposing assets at the end of lease, which has been amazing. We also invested in green technology. Oh, I said dream almost, but it was green technology. Being a pioneer in that area, in particularly electric vehicle charging, has been absolutely brilliant for us. We funded the first electric forecourt in the world, that investment, the investment requirements in that business, that sector are beyond us, but to actually create that business, to fund it in its early days, and then to see it flourish and new shareholders come in, we made a spectacular gain on that investment too.
Yeah, I mean, Vehicle Solutions obviously growing very rapidly on the back of the electrification story. How quickly does that cycle hit its peak and then start to taper off?
Well, it's got a long way to go. I mean, 20% of our assets are now electric vehicles, which means 80% are still internal combustion engines. And that's going to take a long time. Even by 2030, it's not going to be a huge percentage of vehicles being electrified at the moment. It's taking a long process. So, we're at the forefront. It's not just supplying electric vehicle, the funding on that. It's actually helping provide a depot, helping them vehicle management, helping them understand how the battery works and how the charging process works and what routes you have to take. I mean, I've been driving electric vehicle for years, and it's not very often that you need, the range is limited, but it's not very often that you need the range of 400 or 500 miles. And we're building the infrastructure to enable that to happen with GridServe to charge them effectively.
What about on the consumer finance side? Are you seeing a rise in delinquencies?
No, I mean, slowly, but I mean, there's another reason why our results are so fantastic, because arrears have been low. Credit quality in the UK is amazing. The UK is a very complex economy because you're seeing such strength and then you're seeing such fragility. So it's really hard. The Bank of England has a very difficult process to actually just make the demand a little bit less to control inflation, and that's very difficult. So hopefully the rate rise today is not too significant. Hopefully it's not the 50, hopefully it's the 25. But we've seen rates go up since December 2021. It's a long process. 13 rate increases over a short period of time. When you look back, it's been so stable for so long, and I've got people in the company who haven't seen rate rises, and that's one of the difficulties that every business has got. New people haven't seen rate rises. They don't know what to do, and it's taking a while for that to feed through. So inflation's taking a while to feed through, and it take a while to control.
It's a fascinating point that you raise there. I mean, trying to get a handle on consumer mentality, on consumer psychology, and for businesses as well who may not have seen this either. You just can't map it. You can't.
No, you can't map it. And we've seen huge demand last year because people are getting in and making those purchases because they're seeing the price go up. So what do? Bang, go and buy now. So that demand has probably been greater than people expected. We saw great new business volumes last year for retailers, etc. And now we're seeing it taper off. So we're seeing things start to cool down. So, do you need to put a massive increase in interest rates to cool the market? It's probably already cooling. We're making decisions. We've been growing our staff, regularly. And this year I'm saying, bang, we'll only replace staff as we get turnover. We're not budgeting on growth, we're budgeting on efficiency, and that's the thing that's missing in the discussion. We have to improve efficiency across the economy to also help meet the demand.
Robert, got to leave it there. Always good to talk to you. Thanks for joining us today.
Thank you very much, Ian.